If you like this video, make sure to subscribe to our channel and hit the notification bell icon to get the latest updates.
So we are discussing about the goods issue. Goods issue is nothing but we are issuing the raw material to the production. Issuing the raw material to the production. We are going to be calling as issue raw material to production. To production actually. So this is going to be called as the goods issue. Okay. So when you are going to be issuing the raw material to the production, as I told you that, okay, raw material consumption account is getting debited and raw material inventory account. Okay, so we are going to be creating the inventory account is getting debited. Credited. So okay, credited. So this is an accounting entry. Okay, yes. This I'll tell you how the integration is going to be done. I'll be showing the demo. Okay, not a worry about that. Okay, we are going to be discussing about this. Okay, one, the raw materials are going to be issued to the production. Okay, so various processes are going to be happened in the production. Lot of things are going to be happening in the production. The raw material is getting converted to the semi-finished goods. There will be overheads calculations will be there, production variance calculations will be there. A lot of things are going to be happen in the production, and finally the finished goods is getting manufactured. Okay, so the finished goods is coming out from the plant. So what we are going to be calling it as, okay, we are going to be calling as goods receipt. Again, there is a goods receipt is going to be coming, but this is not a raw material goods receipt. Already the raw material goods receipt already we have done. This is going to be called the goods receipt for finished goods. The goods receipt for the finished goods. When we are going to be getting the raw material from the vendor, what I told that is going to be called as another goods receipt, where you are going to be debiting the raw material inventory account is getting debited and GR, IR clearing account is getting credited. This is at the time of receiving the raw material from the vendor. This is also a goods receipt, but here we are going to be increasing the inventory for the inventory of raw material. But here this goods receipt is talking about the finished goods. So what is the accounting entry I told that? Finished goods inventory account is getting debited and change in finished goods inventory account is getting credited. Very, very important. So when you, this is also a goods receipt. Here also the moment type is going to be called as a 101. Okay. So the finished goods inventory account is getting debited and the change in finished goods inventory account is getting credited. See the difference is the both accounting entries. This is at the time of receiving the finished goods and this is at the time of receiving the raw material. So when I go to the change in finished goods inventory account, what does it mean that? Who can tell this? We already discussed in this last week. Who can tell this? What is this change in finished goods inventory account? What should I call it? Anybody?
It's COGM.
Exactly. It is going to be called as a COGM, cost of goods manufactured. It is going to be called as a COGM, cost of goods manufactured. So how much you're going to be debiting? If I'm debiting, okay, $5,000 example, just an example, okay, $5,000. So you're going to be debiting the COGM, cost change in finished goods inventory account. The COGM, the cost of goods manufactured, is going to be the credit. But how do I know that this is the amount of cost of goods manufactured? Can you show me the split of the cost components? What are all the components you're going to be including in the COGM? Very, very important. If I'm going to be calling it as a computer, if I'm going to be calling it as a computer is only the one asset you're going to be calculating, but what are all the components are there in the, what is the cost of the component? The cost of the computer is $5,000. Okay, $5,000. Here the cost of the component is going to be called as the 5,000. But in this cost of the component of the computer, what are all going to be coming? This is the component, complete component you're going to be calling it as, but what are going to be included in this? Can you split and show me what is the cost of the monitor? What is the cost of the mouse? What is the cost of the keyboard? Can you split and show me that? This is what exactly what we are going to be expecting. COGM is nothing but it is a component you are going to be debiting as a 5,000 USD dollars. But in this 5,000 USD, when you are going to be calculating the COGM, what are going to be included? What are going to be included?
It will be the prime cost plus other factor audits.
Everything. It will include the material overheads and the production overheads and the production variances, and we are going to be calculating everything. Very, very important here. So what we are going to be calculating, okay? We are going to be calculating the raw material variances. We are going to, what is the total raw material variance and what is the total production variance? What is the total production variance? And what is the second one? Okay, what is the second? What is the next one? What you are going to be calculating? Raw material overheads, production overheads, and here also it will come. It's going to be coming as a raw material variance and the production variance. This is going to be production. This is going to be called a production. So you want to split this, right? When you are going to be taking as a production variance, indirect labor charges, direct labor charges, everything will come into production variance. Indirect labor charges, direct labor charges, and everything. So can you show me how you are going to be calculating the total cost of goods manufactured? So I need to understand the cost component structure for this. Definitely. For my accounting entry, I don't have any problem. For my accounting entry, you're going to be debiting the finished goods inventory account and change in finished goods inventory account. But as a cost analysis, can you show me the complete split of this cost? How we are going to be deriving this cost? So what I need to do here. So when I come here, I need to understand the cost component. So if I go to SPRO, IMG, controlling, product cost controlling. Okay, so we are going to be discussing about the cost component structure. So product cost planning, basic settings for the material cost, and here you can see here define the cost component structure. Define the cost component structure. Very, very important. So you are going to be defining the cost component structure. One second, it will come today. Okay, so here you can see here. Okay, you can create your own cost component structure, depends upon the requirement. Okay, depends upon the requirement how the cost component structures are going to be defined. Okay, defined based on the requirement. Not all the cost component structures are going to be the same. It depends upon the what is the type of manufacturing you're going to be using, what is the nature of the company, and what type of costs are going to be included. Based on the requirement only, we are going to be doing the cost component structure, but it is not defined as a standard cost component structure for anything. Yes, SAP is going to be giving you one standard cost component structure, that is Y1. Y1 is going to be called as a cost component structure. You can see it is going to be activated, and this is the cost component structure we are going to be using. This is the cost component structure we are going to be using. Now, when I select the Y1 example, I'll take you one example. If I double click on the cost components with attributes, what are going to be the attributes you are going to be using? Material cost, direct material cost, indirect labor charges, direct labor charges. We have so many things are there. Okay, here you can see here. These all are going to be called as the attributes we are going to be calling. Every attribute will be giving you one cost component. Okay, every attributes will be giving with one cost component. Here you can see here. So this is not a standard. You can take any number. 101 is nothing but we are going to be using as a standard procedure, but you can use any number. So Y1 is nothing but our structure. Always you have to remember Y1 is going to be called as a structure. It is only structure. It is not same as for everybody. Okay, you can define your own structure also. You can define your own structure also. Depends upon the nature of the requirement. I told that. So what are all the cost components I require for this particular structure is very, very important. How many cost components you require? For example, if you see here, direct material, okay, credits, third party, material overheads, personal time, machine time, setup time, production overheads. there is no production variance is not available. So I need to take the production variance also. And because I'm going to be calculating only the COGM, so I don't want to include the admin and the sales overhead. If I'm going to be including the admin and the sales overhead, I'm going to be calculating the cost of goods sold. I'm going to be calculating the cost of goods sold. Very, very important here. It's a very, very important, but I don't want to include. But yes, if you're going to be calculating the cost of goods sold, then include the admin and administrative expenses. But if you're not including the administrative expenses, then you're going to be doing only the COG. Let me take one diagram to you. Okay, so let me take one standard diagram to you, for example. Let me take this diagram to you. See here. If you see this diagram, you will come to understand here. Okay, see here. So as I told you in my last class, I told that you're going to be getting the revenue, you're deducting the sales deductions, and what you're going to be getting, you're going to be getting the net revenue, and from the net revenue. So here you can see these all are going to be called as the cost components. Okay, variable material cost, variable production cost. Okay, production variance. Again, after you remove all this, you are going to be getting the contribution margin one, and from the contribution margin one, okay, material overheads you are going to be deducting, production overheads you are going to be deducting. So till here, it is going to be called as a COGM only. Till here, up to here, this is going to be called as the COGM. From the COGM, you are going to be getting the contribution margin too. Okay, so from the contribution margin too, you're going to be deducting the R&D, research and development, marketing, and the sales cost. But if you're going to be including the R&D, marketing, and the sales cost, then it is going to be called as the contribution margin 3. This contribution margin 3 is going to be called as the COGM, as a COGS, cost of goods sold. So if you want to derive only the cost of goods manufactured, you should not include the R&D, marketing, and the sales reduction. You need to exclude these three. Then only you will get a contribution margin. This contribution margin too is going to be called as the COGM. That is what exactly I told in this example. The COGM is nothing but total $5,000 US. So how $5,000 US includes all these cost components. Includes all this cost component, material, variable material cost, variable production cost, production variance, and material overheads and the production overheads. If you include everything, you are going to be getting the COGM. So how do you define this, all the cost components? These are going to be called as my cost components. You can see here. You can see here. These are going to be called as the my cost component. Every cost component should have one GL account should be get assigned. So for example, if I take one cost component, for example, I'm going to be taking the material overhead. Okay, I'm taking one material overheads. What are all the overheads which are including at the time of material cost? Okay, so when I'm taking the material, if I go to the assignment of cost component elements, you can see this is my element. You're going to be taking, this is the element here. This is the GL account which you are going to be considered. This is going to be called as the material overheads. The cost component structure we are going to be using as a 101. Okay, so this is the material overhead. In the same way, when I take something about the credits or direct materials, what is the GL account? This is the GL account. So you can see here, this is the GL account we are going to be using. Okay, we can see here there are different GL accounts. There are different material overheads or costs are going to be incurring. So I'm going to be giving each and every material cost estimation for the material overheads. You can see different materials, different GL accounts are going to be included. So this is the cost component structure. You need to define one cost component structure. Very, very important here. This is the cost component structure we are going to be defining. But at what level? You can see at a chart of account area level. If I go to the cost component to the organization level, for which company code you are going to be assigning here. Okay, company code I'm putting as a place means all the company codes are going to be included. If you are going to be excluding your company code, or if you want to define only for your company code, then instead of putting the place, you have to give your company code. Okay, what is your company code here? So the structure you're going to be defining is going to be called as a Y1. Y1 is nothing but your structure. Y1 is nothing but your structure. So where you're going to be assigning this structure, where you're going to be assigning how this structure is going to be. Okay, I understand that you are going to be creating one structure, and for the structure you're giving all these cost components. Very good. you're giving all this cost component. That is very good. I understand that. Okay. So if I go to one material, I'm selecting all the things, and I told that plant is a very important thing here. I'm going to the accounting tab. So I done the stock. Okay, further cost estimations. And 1 second. For this material, actually, there is no cost component actually. So if you see here, for this material, there is no cost component structure we defined. 1 second. I'll take another material, for example. No, for this material also, there is no accounting tab one. No, for this also, there is accounting is there, but there is no costing tab. Accounting is there. Okay, you're going to be deriving the accounting, but there is no costing. Costing is required actually to do the material cost estimation. In the month end, we will do the material cost estimation for that material. Okay, I don't see any controlling here. Costing is not available for this material. So you're not going to be deriving any cost component for this material also. So if I take another material, anything, another material, for example. No, this is only accounting. So I don't find anything. Okay, so for example, if I remove the, okay, if I remove that plant and if I see for all the plants, if I see for all the plants, no, accounting only. No, accounting only. So I don't find any material which is having the costing actually. No. 1 second. So these all are going to be called as material types. So I'm just want to search for the material with ROH. Okay, these all are going to be called as the raw material. See, if you see here, this material is having the accounting view and the costing view also. This material is going to be activated with the accounting view and the costing view. I have both. Costing view is available for the costing purpose to derive the cost of goods sold. Okay, if we are going to be deriving the total production variance and everything, I activated the material cost estimation for the both. Okay, for the costing and for the accounting. So I'm just selecting only the accounting and the costing. Okay, so I'll go to the organizational. I'll give the plant. Now here you can see this is the accounting view. The total stock which is available is the 101. You can see here. And if I go to the material price analysis, I told that, okay, so this is the material we are going to be activating for the material, okay, for the material ledger. In how many currencies we are going to be doing the valuation in the company code currency, in the group currency. You can see here, this is the group currency. Group currency is nothing but you're going to be doing the valuation in a group, that is the euro currency. What is your company code currency? Your company code currency is going to be called as a USD. You can see this is the valuation you're going to be. This is a material ledger. This is the material ledger we discussed in the last classes. Okay. So now when I go to the costing tab, So this purchase, okay, this is the costing, and we are going to be using the, okay. So here you can see here, they have done the cost estimation in the second period. Okay, now if I go to the cost estimation, only for this material, we are going to be talking only for this material. Dates and everything, structure, valuation, you're going to be seeing the cost. Okay, so here you can see here, just I'm scrolling down. Only I'm taking this material, raw material 28, this is going to be called as the bike seat. For example, I'm going to be taking here. Now you can see here, there are two components are there. One is cost of goods manufactured and the cost of goods sold. Very, very important. Cost of goods manufactured and the cost of goods sold. Cost of goods manufactured is different. As I told you that if you are going to be including the R&D and the marketing and the sales cost, this is going to be called as the cost of goods sold. COGS. If you are excluding this R&D, marketing and the sales cost and other components, if you are going to be including only the material cost and the variable cost of the material, then this is going to be called as the COGM. There is a lot of differences there. So here you can see here, there are two components are there. One is the COGM, another one is the COGS, cost of goods sold. If you see here, cost of goods manufacturing, okay, the total cost view is the 225. The total cost view is going to be called as the 225. You're going to be taking only the cost of goods manufactured. If I double click on it, it will show all the components. Okay, it will show all the components below. If I double click on the cost of goods manufactured, just I'm bringing above. Okay, on the top, I'm just scrolling it up. You can see here. So direct material 101. So there is only the cost you are going to be calculating on the direct material, because there is no credits, there is no third party material over personal time, machine time and everything. These costs are not going to be included. So you are going to be taking what is the cost component structure you're going to be taking. So if I go and open the next one, next screen, another screen, SPRO, IMG, controlling, product cost controlling, product cost planning, okay, basic settings for the material cost. And here if you see the define the cost component structure, and here you can see what is the cost component structure Y1. If I take the Y1 as a cost component structure, if I double click on the attributes, these are going to be called as attributes. Now if you see here, 101 is going to be called as a direct material. 101 is the direct going to be called a direct. So the cost you are going to be incurring only the direct material, because even though you are going to be taking the credits, third party material overheads and personal time and the setup time and everything, so those costs are not going to be included. The total cost you are going to be calculating is only the 225. That is on the direct material only on the direct material. The cost is not calculated on the credits, third party and everything here. Very, very important here. So when you do the material cost estimation for this particular, you can see the cost is going to be called as the 225. So when I go and define my COGM, that is the change in cost of goods manufactured, this amount is only this amount, whatever the amount you're going to be calling, this amount is 225. This amount is 225 only, $225. But if you see the splitting, of this cost, the splitting of the cost is only for the direct material. There is no cost is involved for all this kind of cost component structure. So when I do the material cost estimation, see, very, very important here. Very, very important here. So this is what exactly. So when I go back one step back, here in the costing, in the second period, in the 2016, okay, the total was 2.25. That is a price cost, that is the planned price, and you have not done any cost estimation for the current month and the previous month. Very, very important. So when I take only the 1 month, the total, when I take the future one is going to be showing it. This is the cost element. You can see here. This is the cost element. So the total cost is coming to this particular element, file 111000. So if I go back, if I just go back one step back, and if I go to the very direct material, select, double click on assignment, you can see this is what exactly the cost. So you can see the GL account. This is going to be called as the primary cost element, and the total cost is getting triggering to this particular primary cost. Why? Because there is no other cost are getting involved. If I go back and see here, there is no other cost. Definitely, if I see here the cost component manufacturer, I don't see any kind of other components. See here. You have to go to the cost, double click on manufactured. If I come down, you can see the total cost is only incurring in the direct material. There is no other costs are going to be. That is what exactly you can see that is going to be debiting to this particular account.
Mahesh, I have a question here.
Yeah, please.
This cost component structure will be applicable for finished goods and semi-finished goods, right? Not raw material.
This cost component structure
Will be applicable for semi-finished and finished goods because
exactly.
it have the raw material cost, production
Everything.
overhead.
Exactly.
Yeah. So
You are going to be doing when you are going to be doing the cost estimation in the month end closing activity. So if I go to the /O CK11N, you're going to be using the transaction code CK11N. And if I do that material cost component, okay, this is the costing variant. This costing variant I'm going to be creating. This costing variant I will be assigning in the production order. Why? Because here, when you are going to be getting the COGM, sir, only when you create the production order. The PP consultant, what they will do, they will be creating one production order. Okay, for in this production order, they will be assigning one costing variant. They'll be assigning one costing variant. So in this costing variant, if you open this costing variant, there will be a cost component structure will be there. There will be a cost component structure will be assigned in this costing variant. Okay, see here. So if I take this variant, what is the variant they are using here? The variant they are going to be using is the PYC1. Okay, see here.
Yeah.
See, I'll go to the variant now. This is I created our cost component structure, and here, if I go to the material cost estimate with quantity structure, your plant is nothing but your valuation. Okay, so here we are going to be calling as a costing variance. If I go to the costing variant, what is the costing variant I've been using? PYCC1. Okay, see here, you can see this is the costing variant I am going to be using for this material. So this costing variant I am assigning where I'm assigning in the production order. I'm assigning in the production order. So this is my costing variant. So if I go into the details of this costing variant, see here. If I go into the details of this costing variant, what type of cost you are going to be included? I'm going to be including this. I'm going to be including the standard cost estimation. Okay, what is the price you want to do? I want to make it as a standard price only. There will be other prices. Okay, standard price, tax base, and everything. But I want to do the cost estimation for the standard price. Okay, right. Now next one. What is the costing variant? If I go to the costing variant, okay, here you can see here. If I click on the overhead, you can see the costing sheet is getting assigned. Okay, activity types and everything I'm going to be creating. This we need to understand by based on the controlling classes. Okay, so next one, price control, costing, everything. If I go to the additive cost, what type of cost? If I go to the assignment, in this assignment type, if you go to the assignment, here you can see the cost component structure. Here you can see the cost component structure. So my cost component structure, what is your cost component structure? Your cost component structure is Y1. Your cost component structure is Y1. So this cost component structure I am assigning here. You can see it. This is my cost component structure. What is the cost component structure? for your company code. Okay, your company code is 71. So this is your cost component structure. This cost component structure, what you are going to be doing, you are assigning in this variant, that is a costing variant. And this costing variant, what I will do, I will assign in the production order. I will assign in the production order. I'm going to be creating one production order. In the production order, I'm going to be assigning that particular costing variant. Very, very important here. So if I don't assign this costing variant in the production, then definitely 100%, you will not able to, that 100%, you will not be able to see the cost components like this. Why? Because you are using this material for the costing component. That is what exactly you can see.
Okay. So when we settle that order to some semi-finished or finished goods, then we can see the structure, right? Cost component structure of what components it is used in that material.
Once, yes, once your production order is confirmed, see, very, very important, confirmed. When I'm going to be using the confirmed, when you are going to be ordered, okay, I'm creating one production order, sir. I'm creating, one second, sir, 1 second, somebody's knocking the door. 1 second, 1 second.
Okay, no problem.
Okay, so what I told, okay, so once your production order is confirmed, when you're going to be confirming the production order, when all the activities are going to be confirmed, then only you're going to be confirming the production order. Until or unless I'm not going to be, for example, if I go to one production order, if I'm going to be, okay, so my production order, okay, so let me take one production order, CO03. Okay, I'm going to be CO01 is for the create, CO02 is for the change, CO03 is for the display. I'm going for the CO03. So this is what exactly I told, the production order display. So the PP people are going to be creating the production order. Nothing to be worried about the production. The PP people are going to be creating the production order. I'm going to be taking one controlling area. So these all are going to be called as the production orders. These all are going to be called as the production order. You can see there are different types of production orders. There are different types of production orders. But let me take one example of one production order. This is the production order. And here, operations. If I go to the operations, see, there are two operations are going to be performed. One is the mechanical processing in this production order, and one is going to be called as the quality check operation orders. Okay, these are the two operations I'm going to be created under this one production key, that is for the production order. If I double click on the first one, okay, if I double click on the first one, this is the first component what we are going to be using here. This is called as the work center. Okay, this is what exactly the work center. If I go into the work center, so this is my work center. Okay, what is the total costing here? If we go to the costing here, in this costing, so these are going to be called as my activities. Okay, one is the setup, machine, and the labor. Very, very important. And this is my cost center. You are going to be creating one cost center here. And okay, so what is the activity type and everything? I'm confirming this with, okay, so how many machines you are going to be using, how many labors you are going to be using, what is the total setup time? You need to confirm. This is the activity you are going to be confirming for this production order. Very, very important. So now just go back. If I go to the components, if I double click on this component, this is my components actually. This is my component for the material. You can see this is very, very important. This is the cost of goods, or this is the BIM, bills of exchange. That is nothing but okay, total bills of materials you are going to be doing here. Okay, so now so we have done the assignment. I'll show all the things. Okay, this is the assignment, and you are going to be doing, this is the profit center, and this is the functional area, and this is the goods receipt where you are going to be using this. This is the control where you are going to be, and here you can see what is the cost, what is the cost sheet you're going to be assigning. This is what exactly I told that. Okay, so here you can see planned costing variant and actual costing variant. This is the planned one and this is the actual one. So when you are creating an order, the production people will ask you, hey Mahesh, can you please, okay, I'm going to be confirming this order. So can you give me the planned costing variant and the actual variant? Can you give me the cost sheet also, please? And can you give me that? So there are two costing variants I created. One is PYG1, another one is the PYG2. If I go to the PYG1, okay, this is going to be called as, so PYC1, sorry. It is here, it is going to be called as the PYG1. So if I go back, one step back, if I see the costing variant, PYG1, I think these are not going to be using. Okay, so this is the costing variant. Okay, so here they're not defined here. So PYG1, okay, you can see here. PYG1 is nothing but costing variant. We are going to be assigning, and the actual variant is going to be called as a PYG2. Here in this particular, I'm going to be talking in this particular, but they're not, somebody has not obtained here. Okay, so if I go to one of the costing variant, so this is what exactly my costing. In this costing variant, if I go to the assignment, in this assignment, I'm assigning this costing variant, my cost component structure. What is your cost component structure? Your cost component structure is going to be called as a Y1. So your cost component structure is assigned. Your cost component structure is assigned in this costing variant, and this costing variant, what I will do, I will assign in the order. Which order it is? This is going to be called as your production order. So once you confirm this production order, every month, what I will do, I will run my cost estimation. Every month end till the goods are going to be manufactured. Every month, what I will do, I will run the cost estimation, the transaction code, which I'm going to be using, called as the CK11N, or you can also call it the CK41, CK40N. CK40N is for the mass, for the multiple materials, and the CK11 is for the individual material. So if I go to the CK11N for the individual material, example, if I'm going to be giving this material, I'm using this material. I'm using this material. Very, very important. Okay. So if I go to this particular, okay, this is the material. See here. If I take this material. So when you're going to be running the run date and the end date, for example, the run date and the end date, for example, December 1st to December 31st, very, very important. If I'm just giving an understanding here, if I go to the Oreo, this is what exactly I call it as a costing variance. So if I click on the cost estimation, okay, if you click on the cost estimation, you can see overall. So you're running the cost estimation for the current month. The current month is nothing but if just for example, okay, just example, okay, the current month, you can take this as an example, because already you are executed for the 11th month and the 12th, that is already you are executed. Why it is coming as a 021-2016? Why it is coming as a 02? By default, it is coming as a 021-2016. Why? Because if I go to this material, same material, just come back. If I go to this material, see, you're not executed any cost estimation for the current period, but the future period is going to be called as the second period. Second period is nothing but your future period. Okay. So when I go to the cost estimation, okay, in the current period or the future period, in the current period, there's no cost estimation is going to be executed. In the future period, if you want to run this cost estimation, then automatically system what is going to take, the date will be taken as a 02, that is the February, and this is going to be the first date, and the 2016 is going to be. So you're running the cost estimation for the month of February, and what is the total cost? What is the total cost? The total cost will be your 202 points. That is the per price. And if I go to the future price, if I go to the cost, if I double click on the cost of goods manufactured, if I see, this is my cost component. This is my cost component. The total cost is only on the direct labor. When you are going to be getting, once you are going to be confirming this production, this is my production order. In this production order, I am assigning this costing variant. In this costing variant, there will be a cost component structure is getting assigned.
Yeah, all this is good, Mahesh.
Yes.
Only thing my this is production order is created, right? And the material is semi-finished goods.
No.
So the
Production
no,
order is confirmed. No, not material is not a semi-finished goods. Material. So when you are going to be confirming the
raw
production
material
order,
is used in that order.
exactly.
When you settle work in progress, it will be in semi-finished goods, right?
Correct. It will be getting set in semi-finished goods.
That will have the component of what material cost and what labor
Exactly.
cost.
That is what
overheads.
exactly. That is what when you confirm that when you do the material cost estimation in the month end, then you will be getting all these cost components. You're right.
But not in this material. What I mean to say, it is raw material. So it
It's
will be
raw
in
material.
that. Yeah. So raw material will not have that overheads, all those things, right?
Raw
Or will
material
it
will
show?
have no. Raw material is going to be if the raw material doesn't have the overhead cost and everything. How do I get a cost component, sir? You're going to be doing this. See, I'll tell you one example, sir. So you're going to start the production, sir. So before I start the production, I need to create the production order. I'm right or wrong?
Correct. Yeah.
So once you create a production order, so what are the activities you're going to be confirming? Okay, these are all the activities I need to confirm. If I go to the production order, for example, where is my production order? If I go to where is that? If I go to this production order, what are all the activities you're going to be confirming? If I go to the operations, see, there are two materials I'm going to be taking here. Okay, one is going to be, these are the two operations, material processing, another one is going to be called as the quality check, but the material is going to be only one. For this material, you're going to be taking the two operations. One operation is the mechanical processing, another one is the quality check. If I go to the mechanical operations, very, very important. If I double click on it, if I go to the operations, some components, if I go to the component, see, in this component, this is the semi-finished goods. I'm going to be creating some, but in the semi-finished goods, what is the initial goods you're going to be taking? Raw material. See, RM124 is nothing but my raw material.
Yes,
RM123 is nothing but my raw material. For this raw material only, I need to calculate what is the total material hosts and what is the total cost of the production and everything, not for the semi-finished goods. If I don't include the raw material, then there is no semi-finished goods, sir.
Yeah, raw material should be included in that semi-finished.
Exactly.
Yeah.
So whatever the cost I'm going to be calculating, whatever the cost you are going to be calculating, all this cost and everything, yes, definitely 100%. You are going to be doing, you are going to be doing for the semi-finished goods only. But if I want to go to the operations and if I want to confirm the operations, that is going to be included with your raw material.
Yeah. Okay.
I think Mahesh, Mohan's question was if the semi-finished goods still is in work in progress at the month end, right? Mohan, you were asking?
Yes.
Yes, correct.
Correct. So if I
Semi-finished
see,
is
that is the
always,
reason, sir. That is the reason, sir. See, that is the reason. If you go back, see, for example, 1 second, sir, 1 second. Okay, 1 second. If I double click on it, see, if I double click on it, if I go to the header, okay, if I go to the header, you can see this is the assignment and everything you can see here. Okay, what is the company code? Okay, for which plant you are going to be doing? What is the goods receipt? Okay, very, very important, controls and everything. That is the reason if we see here, I'm going to be using these operations for the material, that is for the raw material. If I double click on it, I'm going to be creating the raw material. This is what exactly I'm going to be using for the, and here you can see, you're going to be confirming. If I go to the work centers, what are the activities you're going to be basic data? What are the activities costing? If I go to the costing, what activities you're going to be confirming? I'm confirming the production startup and what is the machines are going to be required and what are the total labors are going to be required. And this is the cost center. I'm going to be confirming and everything. Once I confirm this everything, then in the month end, I'm going to be starting the production overheads calculation. So components and the sequences, if I go to the sequences, these are the standard sequences for this. Okay, I'm going to be using. So one second, sir. Just I'll show one more important thing. So I calculate this is the basic units. Okay, the manufacturing is happening to the basic unit and external processing is not available. Intercompany standard cost. Okay, splitting is activated and the overlap time is this is what exactly the time which I'm going to be taking, and we are going to okay now. So if I just go back. Yeah, okay. So these are the components and everything I'm going to be using. This is the material. This is the raw material I'm going to be using and everything. Okay. Okay. So if I go to this particular material, so if I just give this material here, instead of this material, RM28, I'm giving this material now. Okay, see here. Okay, RM124. You can see RM124 in this particular. So this is the semi-finished goods and this is the raw material. Now, if I select the views, now I'll be selecting only the costing view here. I'm selecting only the costing view. I'm not selecting the accounting view.
Yeah. Okay.
Okay, I'll be giving the plans. Now, okay. So if I go to the costing view too, see now. This is the current period valuation you are going to be doing. This is the current period. Till now for this material, they have not estimated any cost. If you see in the current period, they are not estimated. In the previous period, they are not estimated. In the future period also, they are not estimated. If I go to the current period, so no standard cost exists for the material in the solution. So you're not executed any standard cost for this particular material in the month. Okay, so that is the reason. If I come to this material, there is no cost component. There is nothing but you're not calculated. So if I want to see the total cost estimation also, I cannot see. Why? Because then you're not executed. If I go to the previous material, what I've been shown to you. If I go to the previous material, just now whatever the material I explained you, that is the RM28. For this RM28, you can see here in the costing too. If I give the plant for this particular material, I can see there is a cost estimation was done. That is in the month of February. So if I go and I can do it. Okay, so why? Because it is coming with the cost estimation. So I can show that. Now when I come here, when I go to the cost, now I can see the total cost of goods manufactured. If I double click on it, I can see the cost. This is what exactly the cost estimation you're going to be doing. So it is going to be done. Yes, as I told you that. Okay, it is where is the cost sheet? Yeah, here. If we are going to be done, it is going to be done for the material. But in that particular semi-finished goods, what are all the bills of materials are going to be included? It is not only one raw material, but here in this example, only one raw material. But if we go into the real time, there will be so many raw materials are going to be triggered to convert one semi-finished goods.
Yeah, there could be.
So once this is the production order, you're going to be confirming the operations. What type of operations you're going to be confirming? If you go to the operations in the sequential operations, what operations you're going to be confirming? I need to give the work center. And if I go to the work center, what are all the scheduling? Okay, if I go to the scheduling, okay, what is the setup time? What is the processing duration time? If I go to the costing, okay, what type of activities you're going to be confirming? So these all are going to be called as the activities. I'm going to be setup time is going to be required. Machine requirements. If I don't require the machine, these all are the activities. What is the labor requirements are going to be? How many labors are going to be required? How many machines are going to be required? And what is the total production time? I had to give all this requirement. Then only what I can do, I can confirm my production order. If you don't confirm the production order, I cannot run my cost estimation for the monthly.
Okay.
Till the goods are going to be manufactured. After the goods are going to be manufactured, are you going to run the cost estimation? No. What is required of running the cost estimation after the goods have been manufactured? So this cost component structure is very, very important. This cost component structure is very, very important to derive this. So this cost component structure is very, very, so the total cost which is incurred during the cost of goods manufacture is going to be called as the $225 is going to be the cost of goods manufactured. Now, can you show me the splitting, Mahesh? That is what very important thing we need to discuss. Okay. When I see the accounting entry, Mahesh, I'm going to be getting the accounting entry like this. Finished goods inventory account. When you are receiving the finished goods from the raw material from the production order, when you are receiving the finished goods from the plant, what is your plant? Here, 1710 is nothing but your plant. When you are receiving the finished goods from this plant, so you are telling Mahesh, raw material finished goods inventory account is a 225 and the change in finished goods inventory account, that is the COGM, you are going to be calling it as a 225. Very good. You're showing with one accounting entry. But I want to show this splitting, Mahesh. Can you show me the splitting like this? Yes, whatever you are explaining like this, whatever the explanation you're going to be doing like this. Okay, this is the costing side. This is not an accounting entry. This is the costing side. In the costing side, I can go and see, okay, direct material 225. What is the third party? Okay, what is the material overhead? But it is not impacting to my financial accounting. It is not impacting to your financial accounting. In the financial accounting, what you're showing, you're totally showing about the cost of goods manufactured is the 225 only. But I want to see the splitting of the COGM, Mahesh. As I explained you in the diagram, can you see like this? I want to see like this. I want to show you. Can you show me like this? So you have to do the splitting. Then only I can show all the values during the financial accounting entries. There is a new enhancement was done in SAP S4, and that is going to be called as a COGS splitting, as a cost of goods sold splitting action has been given in SAP S4 HANA. You can do the splitting of the cost of goods. So whenever you want to see the splitting, if you don't want to see the splitting, then I can show the total cost is getting manufactured to this. So total cost is getting triggered to the cost of goods manufactured. This account I'm going to be creating, and I will show this. I'll show the one amount that is a consolidation amount. I'll show to this particular account. But if you further want to do the splitting of the COGM based on all the cost components, then I need to implement the COGS. That is what exactly cost of goods sold splitting I want to go. So if I go to the SPRO, IMG, financial accounting for global settings, ledgers, integration, controlling his with over. Okay, so if I go to the ledger, I'm showing the splitting now. 1 second, I need to come to the splitting and I need to explain. Okay, so okay, 1 second. Here it is the cost of goods sold splitting. Okay, so this is what we discussed in the previous class about how the variants are going to be derived. The fields I'm going to be defining. Okay, yeah. Here. So how I came to this path? Simple. Accounting, financial accounting, general ledger accounting. In the general ledger accounting, go to the business transactions. In the business transactions, very, very important, you need to go to the periodic processing. In the business transaction, go to the periodic processing. Under the business transaction, you can see here, under the business transaction, okay, periodic processing. Under the periodic processing, you will find the integration. Under the integration, go to the materials management. Under the materials management, here you can see here, define accounts for splitting the cost of goods sold. Yes, you are showing this completely understanding. My cost of goods sold is going to be coming here. After you remove the contribution margin cost components like R&D, marketing, and the last one is going to be coming in the contribution margin 3. So if you are going to be including the COGM to the COGS, so you want all the cost component structures. Very, very important. I want to see the splitting, the total amount you are going to be debiting at the time of COGS. Now the third entry. What is the third entry? So you are going to be getting the goods receipt. Once you get the goods receipt from the production order, yes, inventory, finished goods inventory account is getting debited, and the change in finished goods inventory account. At the time of change in finished goods inventory account, you are going to be calculating only the COGM. But when you are going to be getting the COGS, the COGS will be going to be getting at the time of delivery. That is going to be called as the PGI, post goods issue. Now the final entry. Now the final entry is going to be coming like this. Delivery. You're going to be doing the delivery. Okay. Now what is the delivery? When you come to the delivery, the change in finished goods account here, very, very important. So what is the delivery? COGS, that is cost of goods sold account is getting debited. The cost of goods sold account is getting debited. And what is the next one? Finished goods inventory account is getting credited. So now here you can see COGS is coming to the delivery. Okay, the time of delivery at the time of PGI. You can see there is a PGI, post goods issue. You can see the cost of goods sold account is going to be coming with the picture. Delivery, you're going to be doing the delivery of the goods. So that is what exactly you're doing, the cost of goods. It is not a billing. Billing is different and the delivery is different. Billing means it is a customer invoice. Billing is nothing but it is a customer invoice. Where during the time of customer invoice, customer account will be the debit and your sales account will become the credit. That is the billing. Billing is nothing but invoice. But here, if you see here, it is the delivery. Delivery means cost of goods sold account is coming into the picture. But at the time of receiving the goods from the production, your COGM is going to be coming to the picture. So now, if you are including what type of cost you are going to be including, I'm including the R&D, marketing, and the sales cost. If you include the R&D, marketing, and the sales cost, then you are going to be triggering the cost of goods sold. Very, very important. Then you are going to be including the cost of goods sold. So what is the total cost of goods sold? It is going to be called as 100,000. So the 100,000 is going to be debited. So the total is 100,000 USD dollars. Very, very important. 100,000 USD dollars is going to be the debit. This is the cost. But Mahesh, when you're showing this amount as 100,000 USD dollars as the cost of goods sold, can you show me the splitting, Mahesh? I want to see the splitting like this. I want to see the splitting like this. No, I cannot show the splitting. This is the total cost of goods sold. If you want to see the splitting, you can go to the controlling. You can see the cost component structure. In the cost component structure, you have the cost of goods sold. If you double click on the cost of goods sold, you can see the splitting like this. You can see the splitting. This is the cost of goods sold splitting. You can see that this is the cost of goods sold splitting. So you can see the splitting. No, in the controlling side, I understand that. Okay, you're showing the, but I want to see the impact in the financial accounting, not in the controlling. In the financial accounting, I'm showing now. In the financial accounting, I'm showing the total cost of goods sold account is 100,000 USD dollars. Okay, but where is the splitting amount? I want to see the splitting like this. What is the cost out of this 100,000 USD dollars? What is the material variance cost? How much? 5,000 USD dollars. What is my production cost? What is my production variance? It is 6,000 USD dollars. What is my material overheads? Material overheads is the 2,000 USD dollars. And what is the production overhead? Production is nothing but 10,000 USD dollars. Can you show me the splitting like this? You're showing the splitting in the controlling. Very good. But there is no impact to my financial accounting. There is no impact to my financial accounting. That is the reason SAP, what it has done here. Now from the SAP ECC to SAP S4 HANA, now they have done the upgrade in the account-based profitability analysis. Account-based COPA they have implemented. Now the SAP is telling now, so you have to implement called as account-based COPA. Now this account-based COPA will trigger the GL accounts to your financial statements. Account-based COPA. Costing-based COPA will never. So this is what exactly the costing-based COPA, and this is what account-based COPA. Now the account-based COPA is refined and redefined in our SAP S4 HANA. Now you can see all the balances will trigger to your financial accounting. Earlier, account-based COPA is not redefined actually. So that is the reason most of the clients, they will be using the costing-based, because earlier we don't have this splitting in the account-based COPA. Directly you're showing this cost here. Directly you're showing the cost. There is no dividing about all the variances and everything. I cannot show the cost in the account-based profitability analysis. So now in SAP S4 HANA, what they have implemented a component called as cost of goods sold account splitting. Now from today onwards, we have a new defined called as the cost of goods sold account. Now you can show the splitting of this cost of goods sold account. You're calling as 100,000 USD dollars. Can you show me the splitting of this 100,000 USD dollars based on my cost component structure? So that the financial accounting entry will be triggered. So that I will have a complete visibility what type of cost and what is the total cost incurred during the manufacturing of a product and during the cost of goods sold has been done. It's a very, very important. It's a very, very important. So now the new define was come as the cost of goods sold splitting here. So how do you define the cost of, because cost component structure, if I don't have the cost component structure, if I don't have the cost component structure, are you going to split the cost? Definitely. So this is my profile I'm creating. If I go to the source account, this is the source account. This is my COGS account. This is my source. This is my COGS account. This account. This account I'm going to be calling. The COGS account is getting debited with how much? The COGS account is getting debited with $100,000. This is the source account. Now this source account should be get splitted into multiple accounts. These are going to be called as the multiple accounts. Now you can see it has to split into multiple accounts like this. What is the GL account for the raw material variance, production variance, material overheads, and production overheads? Show me the value. Split this value of $100,000 and split it according to the production variance. Now this is the source account. I understand that. But what are your target accounts? This is the target accounts. So you are going to be using the target accounts. So these are going to be called as the target accounts. Now you can see these are the target accounts. And what from where you are going to be deriving the target account? The target account should come your cost component structure. If you don't create your cost component structure, if you are not created any cost component structure, I cannot split your cost. Very, very important. This
so Mahesh,
yeah.
Mahesh, does it mean that it takes the values from the cost component structure of CO?
Structure, exactly. That's it. Tomorrow we're discussing this topic. So tomorrow I'll be discussing this topic.
Yeah, that's fine. Okay. So we'll have both costing based and account based. Both.
You can use from today onwards. You can use both costing based and the account based. Earlier we don't have this cost of goods splitting. Actually, earlier we don't have this in SAP ECC. We don't have this splitting of cost of goods sold. Actually, this option is not available.
Yeah.
That is the reason most of the clients, because most of the clients, they're sticking to the costing based only. They're not moving to the account based, because the account based, you're totally showing the cost to the one account, but you don't have the splitting. But today, what I'm telling here, I redefined your account based profitability analysis. That is the reason I told you that in my beginning of the class, I told that AC DOCA table, AC DOCA table, AC DOCA table. So what are the 5 components we are going to be triggering? GL, asset accounting, material ledger, controlling, and COPA. This COPA is going to be called as account-based profitability analysis, AB. Now you can see the flowing of the cost of the COPA values to the AC DOCA table. Now you can see the COGS into the AC DOCA table from today. Earlier the BSEC table doesn't have the COGS actually. So now today you can show the complete COGS accounts to the AC DOCA table. That is what this can be achieved by using of this account-based profitability answer by using the cost of goods sold. So tomorrow I'll explain the cost of goods sold account. Okay, don't worry. Any doubts here today's class?
Okay.
Are you finding the importance of the FI with MM integration now?
Yeah,
including costing side as well, Mahesh.
This is the complete I told. In the overview of FI to MM, I will not explain all these things. Just I'll go to the valuation class, how the integration is there. Just I'll go to the OBYC/NOBYC. I'll go to the OBYC and okay, I'll explain the BSX, how the GL accounts are getting integrated, what is the cost chart of accounts, and where the GL accounts are coming. I'll explain and I'll close this. But if we want the in-depth of FI with MM integration with the costing side, then I told you it will take up to 6 to 7 classes. I have the time. I'm having a lot of time with me, but you should have a time with, because you came out with some scheduled time. So you're expecting the portion should be get completed within this duration of this time. So you're coming with time. Okay. So that I need to take a permission, whether I should take in-depth of FI with MM or only up to the certification level. If you want me, these all are not going to be required. I'm true or right? I'm wrong or right, sir? Taking the permission.
Yeah, you're right. Okay. Yeah. Because some people may have some reservations.
Yeah, because some people will be having something called as the Mahesh. No, Mahesh, we have some limited time actually. So I need to complete the syllabus so that I don't have the time. Okay, so because then I'll go for the basic level. So these all are important actually. So not only certification, these all are going to be important for your career perspective.
So
Definitely,
Mahesh, a question.
Yes,
So are we doing this account-based and cost-based while we are doing the practicals?
No, sir. I'll give some materials to you. But if I, in the end of the syllabus, if I have the time, definitely I'll take 2 classes on this. Don't worry. Okay. Okay. Thank you very much, all of you. Take care. Yeah. Thank you.
Thank you for attending the session. I hope you all enjoyed it. Don't forget to visit our Vimeo page and follow for more upcoming videos.
Thank you for attending the session. I hope you all enjoyed it. Don't forget to like and subscribe to our channel. Also feel free to ask your questions in the comment section below, and we will reply to them at the earliest.